You're watching Yahoo Finance. I'm Julie Hyman. We're seeing markets sell off today, but one stock in particular has been getting a bit of a lift. That is Tesla. The shares right now up about 2%. And that's after Goldman Sachs reinitiated coverage of the stock with a buy rating. Rick Newman, what's behind this recommendation? Tesla has been sort of all over the map.
It has been all over the map, and it's been all over the markets. But let's start by saying, right before the crisis in the first couple of months of the year, Tesla really did seem to be stabilizing as an operation. Seems to have worked out the manufacturing kinks, more predictability in its orders and its finances. And Goldman is one of several firms saying, look, we think Tesla is really well positioned for the future because they've got this lead in electric vehicles. It's the only thing they do. And one thing that's probably going to happen as all the other automakers, the big ones, face real financial stress, is they're probably going to cut R&D into things that are secondary to what they do. And that is going to be electric vehicles. They're probably going to be cutting R&D. And Goldman's also pointing out that Tesla really does have the lead in over-the-air updates. Those are the software updates they can beam directly to the car, which actually can change the functionality of the car. Tesla really has an advantage there. It looks as if Tesla does. We know Tesla has first mover advantage in the market for electric vehicles. And Goldman, like other analysts, think that is going to give Tesla an even bigger lead than it may have had just a few months ago.
And they talked about also having the compound annual growth rate well over 20% for the next 5 years. I'm curious, all these discussions, Rick, about how the world's going to change after this with people working at home. There's some other things happening now. The air is cleaner in India, in China, in New York City. Are people going to go back to cars the way we did prior to this crisis? Or are we going to learn, hey, clean air is something we really enjoy, and Tesla, here's a product you can have and it looks cool?
I think we're going right back to cars, depending on cars, the way we always have, because that's exactly what happened after the 2008 meltdown. One other factor here we should talk about is oil and gas prices. So if your interest in buying an electric vehicle was to save money on gasoline, that motivation is evaporating simply because oil prices are so low, and most analysts are saying they're going to stay so low. So there's part of the market that wants to move over to an EV because it seems like the right thing to do. They like the fact that it doesn't pollute, and the performance characteristics of EVs are pretty good. But if you're doing it because you're trying to save money on gas, that is not going to be a factor for the foreseeable future. That's one thing working against Tesla. And, we saw after gas prices hit $4 in 2008, that was a big shock in the industry. But look what happened. Gas prices came down, and we're driving bigger SUVs than ever. And that's what consumers want. They've just stopped caring about fuel efficiency for the most part once gas got cheap again. Sorry, Adam.
Yeah, I think that long-termism and looking at the pollution levels might be expecting too much of people. I don't know, Rick. I think you're probably right. All right. Well, again, those Tesla shares are rising by 2% today, well below the price target of that Goldman Sachs analyst, which is $864. They're trading in the neighborhood of $735 or so today.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.